Hello friends, welcome to learning sessions, and today in this video we are going to discuss about the recovery of the retail loans, which is a very important chapter from the module B of RBWM, that is retail banking and wealth management. So if you're preparing for the retail banking and wealth management, you must be watching this video because the important topics like SARFAESI, Lok Adalats, DRT are also covered in this particular chapter. And if you want to get all the previous video, then do subscribe to our channel right now and press the bell notification icon so that you get updated whenever we upload the new videos. The full course of RBWM along with all three papers of Jaiib is available on our website, where you'll be getting the full course videos, chapter-wise previous year questions, mock test, mega mock test, and the complimentary access to the EPDF notes. So what are you waiting for? Do enroll right now and start preparing for the same. And other than that, on sign up, we are providing the access to the free PDFs also. So do sign up right now. You can visit the link from the description box below and further start preparing for the same. So let's start the session over here, and it's related to the recovery of the retail loans. Now, what do you mean by recovery? Recovery is actually related to, let's say, case that we have given a debt of amount rupees 1 lakh and there was a repayment schedule. Repayment schedule means that the borrowed amount was to be paid in such amount of installments or such number of installments. That is a repayment schedule. Let's take the case that the EMI was fixed to be rupees 11,000 for the next 10 months. In that scenario, 11,000 rupees are to be paid for each and every month for the next 10 months over there. That is a repayment schedule, and if there is any default in the same, that is said to be the default in the payment over there, right? Now, what can be the methods of repayment? One of the type, it's related to bullet payment. Now, bullet payment is related to that during the tenure of the loan, you'll be paying the interest only, and at the end of the tenure, you'll be paying the accumulated amount, right? And it may also be the case that you are also paying the interest amount along with the principal amount at the end of the tenure over there. Let's say the case that the particular, let's say XYZ company is there, and further they issued the bonds. Now the bonds are having the maturity of 5 years. Now the redemption amount is to be paid at the end of the maturity of the bond over there. That is basically showcasing what? That is showcasing the bullet repayment over there. And also the other type, it's related to fixed installment of loan. In case of fixed installment of loan, the principal amount, a fixed amount of principal payment is made. Let's say the case that total amount, loan amount of rupees 1 lakh was taken, and let's say the case that the fixed amount of rupees principal 10,000 is being paid each and every month, and for the interest component will be different. Let's say in the starting point, when the total amount is rupees 1 lakh, the interest component would be much enough, and further when it is reducing gradually, the interest component will reduce and ultimately it will be zero in the end, right? So that would be the case related to fixed installment of loan. Now the other one, we are having the EMI. Now in case of EMI, a fixed amount of EMI, equated EMI is basically equated monthly installment, that the fixed amount will be paid, which will be covering some proportions of the principal and some proportion of the interest over there. That is to be paid over there, and further that is to be paid for a fixed period of time over there. That's the EMI over there. And how we can be calculating EMI? There is a simple formula related to it, that is P into R into 1 plus R raised to power n divided by 1 plus R raised to power n minus 1, and hence we can easily be calculating the EMI. And we will also be solving question based upon the same in the module E related to the RBWM. So do not just worry about it right now. Just memorize the formula. It is P into R into 1 plus R raised to power n divided by 1 plus R raised to power n minus 1, where P is the principal amount, R is the rate of interest, and this is the monthly rate of interest. Let's say the case the yearly monthly rate of interest is given to be 12%. So per month rate of interest would be equal to 12% divided by 12. That will be equal to 1%, and in decimal component it will be 0.01 over here, right? And we'll be writing it accordingly. And N will be equal to the number of tenors. Let's say case if the EMI is to be calculated for 2-year period. Now in 1 year there are 12 months, so in 2 years there will be 24 months, so N will be equal to 24 in that scenario. Okay, so in this way we can easily be calculating the EMI. Now after that, it's related to default and rescheduling of the retail loan. Let's say case that amount of was that were to be repaid, that was rupees 10,000 each and every month. It may be the case that the borrower has not paid the amount at all, or it may be the case that the person may have paid the partial payment. Okay, so the partial repayment can also be there. In both the scenarios, there is amount that is actually now overdue. That is actually now overdue. We say this amount to be irregular amount over there. So irregular amount is actually showcasing that particular amount that was to be paid but that has not been recovered so far. Okay, it may be showcasing the component of principal as well as a component of interest over there. That's actually what that is, a irregular amount over there. And sometimes it may also be the case that the loan account is rescheduled. Let's take the case of a housing loan. In case of housing loan, let's say case it was given for the construction of house and 18 months of the moratorium period was given, right? Now in that scenario, whatsoever the interest component for the 18 months, that will be accumulated, and after the 18 months the principal component and the interest component that accumulated for 18 months, that will be actually be aggregated, and further the account will be rescheduled based upon that, and further the EMI would be based upon that particular sum of amount, right? That's actually the rescheduling of the account over there, right? And further it may also be the case that the account, there was default in the account, and after the settlement between the borrower and for the lender over there, it may be the case it is now decided that the account will be rescheduled so that the whole overdue amount can be repaid in EMIs over there, right? So that could be the case. And the defaults can be of different type. We can be having the genuine default. In case of genuine default, there can be reasons due to which the borrower default, basically due to the reasons which were beyond the control of borrower, right? And the reasons for the genuine default could be related to, let's say, case that the customer failed to pay the EMIs due to the personal setback or due to job loss or due to unforeseen conditions, that something like that. Or it may also be the case that the customers from the business community, the customer suffers a setback due to new competition, or it may be the case due to some environmental condition like the COVID pandemic was there, right? Many of the businesses did fail due to genuine defaults, right? And further it could be willful default. Now the definition was given by SSS Kohli working group over there, and RBI defines a willful default actually related to where there is deliberate non-repayment of the dues. Like when the customer is having the capacity, the borrower is having the adequate capacity or adequate cash flow so as to pay the amount, so as to repay the amount, and is having a good net worth over there, but the borrower is not ready to pay the amount willfully, that is a willful default over there. And it may also be the case that the customer might have siphoned off the particular dues, or it may be the case there is diversion of funds over there, or it may also be the case that particularly the borrower has eroded the security which was available without the consent of the bank over there. All these are cases related to the willful default, right? So willful defaulter is a person who is not ready to pay back the amount even if the person is having the capacity or the ability to do so, right? And there are some penal measures against the willful default. One of it's related to that no additional facilities are to be granted by the bank or financial institution to the listed willful defaulter. So if the person is in the listed willful defaulter, no additional facilities to be granted, and further the legal process is to be initiated at the earliest, and also the lenders may initiate the criminal proceedings against the person, against the willful defaulters, and after getting the consent from the board of directors, the particular photographs of the willful defaulters can also be showcased on the website and also in the branch premises over there. And for the bank can proceed against the guarantor if there is actually guarantor. In case of willful defaulter, the bank can proceed against the guarantor also, right? And that's particularly provided under the contracted. Then let's understand that what is diversion of funds. Let's say case you were actually given the funds so as to purchase an asset. Like let's say you were given a fund amount so as to purchase camera. You basically took a term loan from the bank over there, but you basically utilized the term loan proceeds for something else, or you basically took a CC limit from the bank that was for working capital purposes, and you basically utilized for the long-term capital purposes over there, right? Or you basically deployed borrowed funds for the purposes or creation of the other assets which was actually the loan not sanctioned for, right? Basically you were given the loan for purchasing the camera, but did you purchase another asset out of it, right? You basically routed the funds to any other bank or for particularly members of consortium without any permissions of the lender over there, right? So that could be related to diversion of funds. And other one, it's related to siphoning of funds. Now what is siphoning of funds? If the borrowed funds are utilized for the purposes which are unrelated. Let's say the case if particular person, let's say person A took the loan for purchase of camera, but instead of purchasing the camera, the person purchased the sound system which is actually somewhat related to the business itself. That's actually diversion of funds. But when the person A purchased, let's say another thing, let's say he purchased air condition for his home purposes or something, okay, so that is siphoning of funds. So siphoning of funds is actually detrimental, okay, it is detrimental. And further then it's related to monitoring of loan accounts. Now monitoring of loan accounts means what? That it has to be designed in such a manner that we can get an idea that who are the willful defaulters and who are the genuine defaulters, and we could be dealing with both of them. whether those are genuine defaulters, whether those are willful defaulters, we could be dealing with them, right? And further, while genuine defaulters are to be handled very sensitively, because you have to take care, you have to make the project viable over there, right? In the case of willful defaulter, you just need to start the legal proceedings, right? And you should not be basically taking much time. You must be very much professional, as well as pressure has to be put on for the recovery of money over there, right? Now let's understand the SMA accounts. Now there are different categories of the accounts, like we are having the standard account, we are having the NPAs, that is a non-performing assets over there. Now before the account becomes NPA, the accounts showcase the signs of irregularity. Now particularly if there is irregularity between 1 day to 30 days, then the account is classified as SMA 0, that is special mention account category 0. And if the particular overdue or the irregularity is 31 days to 60 days, then it is categorized as SMA 1. And further, if irregularity is ranging from 61 days to 90 days, then it will be showcased as SMA 2 over there, right? And these are the different categories under the standard category only, right? Even if the account is under the SMA 2 category, the account is still having the standard category, and further the loan account will be attracting the provision norms as per the standard category only. Only after the 90 days, when the account will be categorized as a non-performing assets, then in that case only it will be particularly attracting the provisions related to the non-performing assets, right? So we are having the standard assets, non-standard assets, the accounts which are in order, and SMA types are basically the types or subtypes of basically we can say standard accounts only, which are showcasing the signs of irregularity, right? And further it's related to the standard we are having the substandard accounts over there. Now accounts which are NPA, those will be substandard account for the next 12 months, and once the account period is having a life of NPA is having a life of 12 months, after the life of 12 months, the account is classified as doubtful asset. Now under the doubtful assets, we are having the 3 categories, that is doubtful 1, we are having doubtful 2, and further doubtful 3 category over there. Now for in doubtful 1 category, the account remains in NPA for 12 months. In doubtful 2, it remains for 24 months. And in case of doubtful 3, greater than 36 months, that is for 36 months beyond, it will be remaining in doubtful 3 category only, right? And further, if due to any reasons, the auditors do want the asset to be in the books of the account, it will then be transferred to the loss asset category, right? So these are the different NPA categories over there. Okay, now let's understand the provisions related to it. Now in case of the standard assets also, the provision is to be maintained. If the account is actually related to a direct agriculture or small micro enterprises, in that scenario it will be attracting a provision of 0.25%. For all cases, it will be attracting provision of 0.40% of the outstanding amount. And if the account is related to commercial real estate, then it will be attracting provision of 1% over there. And further, if it is related to CRERH, that is commercial real estate residential housing, then it will be attracting a provision of 0.75%. And if it is related to teaser rate housing loans, now what do you mean by teaser rate housing loan? When there is lower interest rate which will be charged for the initial period, but when after that it will be charged at a higher rate over there, in that scenario it will be 2%. It will be 2% over there, right, during the teaser period over there, right? And further, for the substandard assets over there, the account is to be categorized either as a secured substandard or the unsecured substandard. Now the categorization of the standard or of the substandard account category will be based upon what? It will be based upon the criteria on the originating value of the security. Let's say case the value of security on the very beginning of loan. Value of security on the very beginning of loan, if it is up to 10%. If it is up to 10%, right? In that scenario, if the value of security is greater than or equal to 10%, in that scenario, the loan is considered to be what? The loan is considered to be what? It is considered to be the secured substandard loan over there. We say the loan to be substandard, secured substandard loan over there in case the value of security is more than 10%, is not equal to more than, is just more than 10%. Value of security is more than 10%, then the loan is considered to be secured substandard loan. And if the loan is secured substandard loan, then the provision of 15% it will be attracting. And further, if the loan is particularly having the value of security from the very beginning of the loan up to 10%, then it will be considering then it will be basically attracting a provision of 25%, because it will be a unsecured substandard loan. And if the loan category is belonging to the infrastructure loan, then it will be attracting a provision of 20% over there, right? And further, if we talk about the doubtful loans, I already told you that we are having the three categories: doubtful 1, doubtful 2, doubtful 3. Now after being in a category of the substandard assets for the 12 months, the account will now be transferred to the doubtful category, doubtful asset category, and for the next 12 months it will be under doubtful 1 category, and for next 12 months it will be under doubtful 2 category, and after that, after 36 months, it will be under doubtful 3 category. Now in case of doubtful category, we will be actually looking at the realizable value of security and for the shortfall in security. Now realizable value of security is, let's say case the total loan amount is 20 lakh rupees, total outstanding amount is 20 lakh rupees, and further, let's say the case we are having the value of security with us amounting rupees 10 lakh. Now in that scenario, the shortfall amount is 20 lakh minus 10 lakh, that is equal to shortfall in securities for 10 lakh, right? And further, that would be the scenario. Okay, so we do consider the primary security, we do consider the collateral security, we do consider the different particular guarantees which are available, like ECGC or CGTMSC guarantee which is available, but we do not consider the third party guarantees when we are to basically look for shortfall in security, right? Now in that scenario, for that particular amount for which the security is available, that is realizable value of security is available, we consider the provision to be 25%. And in the case of doubtful asset category, whether it's related to doubtful 1, doubtful 2, doubtful 3, so as for the shortfall in security, the provision is to be maintained at 100% uniformly, right? And further, for the doubtful 2 category, where the realizable value of security is available 40%, it will be attracting a provision of 40%, and where you do not have the where you have the shortfall in security, there is 100% of the provision is to be maintained. And further, in case of doubtful 3 category, whether the loan is secured or not secured, 100% of the provision is to be maintained, right? And further, in the case of loss asset, as I told you that if due to any of the reasons, if the particular asset is not written off and if it is permitted in the books of account due to any of the reasons, in that case 100% of the provision is to be maintained. Okay, now there are some other cases also. Let me just tell you one other scenario, that if the realizable value of security is actually less than 50%. Let's say the case the loan was sanctioned rupees 20 lakh and you were previously having a security amounting 20 lakh rupees over there. But right now when you basically went for the field visit, you found that the value of security is now basically lessened and now it is just rupees 5 lakh. That is even lesser than 50%. That the value of security which was initially 100% over there, now it is deteriorated to lesser than 50%. In that scenario, the account will directly be transferred to the doubtful asset category, doubtful 1 category. It won't be transferred to, first of all, substandard category, then it will be transferred to doubtful category, where the realizable value of security is lesser than the 50% of the value which was available ab initio. Then it will be transferred directly to the particular doubtful category. And further, in case the RVS value is lesser than 10% of the outstanding, in that scenario, the account will be transferred directly to the loss asset category over there. And further, the recognition of the NPA is borrower wise, not account wise. If the borrower is having, let's say, multiple accounts, he is having the CC limit, he is having the loan against property, he is having the term loan. Let's say the case CC limit is regular, LAP is regular, and there is NPA in TL only, then all the loans which were taken by the same borrowers will be classified as the NPA asset over there. Okay, that's the concern. And further, if the guarantee, central government guarantee is there, in that scenario, the IRAC norms, that is the income recognition asset classification norms that we basically discussed about, that the different classification of the loans, those won't be applicable. Those won't be applicable in case of the central government guaranteed loans. But in the case the state government guaranteed loans are there, IRAC norms will be applicable. Simple IRAC norms will be applicable. Okay, and further, what are the different norms for the account classification as NPA? That particularly if there is account statement overdue, if there is stock statement is overdue for the 3 months, then the account will be out of order. And for the after 90 days, after particular 90 days of the account statement, the account will be classified as NPA. Let's say case you have not received the account statement for the 3 months. Now after the 3 months, that is for 6 months, the account will be classified as NPA over there. And further, if the account which is in renewal or renewal is overdue for 6 months, account will be classified as the NPA over there. As I told you, for the commercial real estate residential housing, the provision will be applicable at 0.75%, as we have already discussed. Okay, Now, after that, it's related to recovery policy of the banks over there. Now, what's the debt collection policy of the bank? Debt must be duly approved by the board of directors, and that must be built on the grounds of the dignity and respect for the customers over there. It's not the case that the customer has not repaid the account, so we can be irrespectful to the person over there. We can be visiting their place of residence or place of business anytime. This is not the case. Okay, so repayment schedule for any of the loan sanctioned by the bank will be fixed considering paying capacity and cash flow pattern of the borrower, that is to be considered. And further, the bank security repossession policy must be there, that even if in the event of the default is there, that the particular policy, particular procedure must be there, how the bank is going to take the repossession of the security, right? And customer would be contacted ordinarily at the place of his choice, and further, in the absence of any specified place, at the place of his residence, and if unavailable at the residence, at the place of the business or occupation, the person can be contacted with. After particularly contacting the person only, this is possible, right? So either you will be going to the place of the choice of the customer, that if you wishes that you must be coming to his place of business over there, then you will be coming over there. And further, if he says that you must be visiting residence, then you must be visiting at the residence. And further, let's say you basically visited his place of residence, but he is not found there, she is not found there, then you can basically visit at their place of particular job or occupation over there, or at place of business over there, right? And for the identity and authority of the persons authorized to represent the bank for follow purposes, for recovery of due purposes, would be known to the borrowers at the first instance. It's not the case that anyone can visit for the recovery purposes. So whomsoever the person who have appointed, who will be following up, who will be taking over for the recovery purposes, the person identity must be known to the customer at the first instance over there. And then it's about the giving the notice to the customer. So the bank will not initiate any legal or any recovery measure, including repossession of the security, without giving any notice in writing. So first of all, the bank is to give a notice in writing, then only after that you can start the procedures related to the legal measures we can take, or particularly if you even want to take the repossession of the security, that can only be taken after you have given the due notice in writing over there. After that, it's related to repossession of security. Now it's a process related to, let's say you initiated the process of recovery. Now whatsoever the assets which were in the possession of the borrower over there, you want to take the possession of the same so that you can sell them over and further can recover the loan amount over there. In that scenario, you must be giving a written notice, and further you must be mentioning all the things. You must be looking at the value of the security involved, and further you must be looking at the realizational value of the security over there through the appropriate means, through the appropriate value over there. And further, that all process must be carried out in a fair and transparent manner. So the manner must be transparent and fair enough, right? For this related to valuation and the sale of property over there. So bank will have the right to recover from the borrower the balance due. Let's say case the bank has actually financed an asset, and further bank took the repossession of the asset over there and sold that particular asset, but the bank was not able to recover the full loan amount, right? So the full outstanding amount was not recovered. Let's say case the total outstanding amount was rupees 90,000, but the bank is now not able to basically get full 90,000 value even after selling the asset over there. Let's say bank basically covered only 40,000 rupees. Okay, now in that scenario, the bank can recover the rest of the amount from the borrower over there. It's not the case even after selling the property, the bank is having the right over there. Okay, so the bank is having the right, so any of the excess amounts that the particularly, and further, let's say case if the excess amount is there, let's say case the particular repossession of the security was there and the asset was sold for 1,40,000, but the overdue amount was 90,000 only. In that scenario, excess amount of 50,000 rupees will be returned to the borrower. Okay, further opportunity for the borrower to take back the security. So bank will be willing to consider handing over the possession of the property to the borrower anytime after a repossession. Let's say the case the bank has taken the repossession. Bank has taken the repossession of the particular asset from the customer, and particularly the customer is ready to pay, and for the bank must be willing so as to give the possession back to the customer over there, right? That can be done, but that is actually whensoever the notice will be given, we will be giving a fair chance to the customer if he or she wants to take the possession of that particular asset, right? After that, it's related to SARFAESI. Now, SARFAESI is very much important. Kindly please take a note. So, SARFAESI is securitization and reconstruction of financial assets and enforcement of Security Interest Act that came in 2002 over there. So, in the event, let me just tell you, SARFAESI is actually related to what? So, in the event there is default by the borrower, a secured creditor particularly will be having some of the powers under the SARFAESI. And what are those powers? First of all, secured creditors is whom? Let's say the case that bank XYZ has given a loan to person A and further has created a charge of mortgage on the property of person A. So a mortgage charge was created, right? Now in that scenario, bank is creditor, but now bank is secured creditor. Bank is secured creditor in that scenario, right? And A is actually the debtor over there. A is a debtor over there, right? So under the SARFAESI, the secured creditor is having the right so as to take the possession of the property, so as to sell the property, or so as to lease the secured assets over there. And further, the secured creditor is having the rights so as to take over the management of the business. Let's say the case the security was in the name of the company. In that scenario, if the secured creditor feels so, is having the power, so in that scenario the secured creditor can take over the management of the business also. And also the secured creditor can appoint a manager, which is actually power vested with the chief managers of the banks over there, so as to basically deal with the assets of the particular company and also recover money that is payable by any third parties to the borrower. Let's say the case that A was to take amount, that B was to pay amount to A, and A has defaulted. In that scenario, the secured creditor is having the right that they can recover from person B over there, that's a third party, right? And now let's understand the consortium loans. Now consortium loan is actually related to, let's say case there is a corporate borrower who wants to take a loan of 1000 crore, but individual banks are not willing to give such a huge amount, right? Let's say case there was a consortium formed, A, B, C, D, E, 5 banks are there. A basically lent, let's say 300 crore, and B, C, D lent 100 crores, or they lent 200 crore, and further it is amounting to 700 crore, and E also lent 300 crores, right? So that was the amount and total amount, and there was a consortium formed, and using the consortium they lent 1000 crore rupees to the corporate borrower over there, right? So it's a multiple lending arrangement. It's a multiple lending arrangement. So here is a clause: if 60% of the secured creditors in value, because let's say the case that XYZ defaulted, we just consider the case that XYZ defaulted over there. Now in that scenario, if 60% of the secured creditors in particular value agree to initiate the recovery action, because if the asset has been if a charge has been created on an asset by the XYZ, it will be what type of charge? It's a pari passu charge. It's a pari passu charge. Now pari passu charge is particularly related to a charge is created on the whole asset, but in proportionate to the amount which is lent by the lenders over there, right? Now in that scenario, there is actually a particular value of 60% of the secured creditors. They must be agreeing so as to initiate the recovery action. Only then it will be binding on all the secured creditors over there, right? So that's the case. Okay, that's the case with the consortium loans. After that, it's related to loans which are not eligible under SARFAESI Act. Kindly please note it down, quite important, right? So loans which are having outstanding balance of up to rupees 1 lakh. Only the balances which are outstanding balances which are above rupees 1 lakh, those are eligible under SARFAESI Act. So if you're having any of the loans which is having the outstanding balances up to rupees 1 lakh, those are not eligible. And further, where the amount due is less than 20% of the principal and interest. So where the amount which is due by the bank is less than 20% of the principal and interest, that is also not eligible under SARFAESI. That is also not eligible under SARFAESI. And further, if you have created any charge by way of pledge, lien or security of deposit, that is not eligible under SARFAESI. And in the case the limitation is expired, limitation basically gives you a right so as to basically you can legal right that you can actually be enforcing the documents lawfully. That is expired, that is your BC letter is expired. In that scenario, you cannot be initiating the SARFAESI action, right? Agriculture land cannot be sold through particular your SARFAESI action over there. And where security is not charged to the bank, where the security is not charged to the bank, or the charge is not registered with the SARFAESI, Okay, so if you have not registered the charge with the SARFAESI, then also you cannot be initiating the action in the SARFAESI over there. So first clause, it's related to outstanding balance must be greater than rupees 1 lakh, and your outstanding amount must be greater than 20% of principal and interest amount over there. Loan must not be secured by pledge, lien or secure deposit over there. Limitation must not be expired. It must not be related to agricultural land, and your charge must be registered with SARFAESI. Only then you can be eligible for a particular recovery under SARFAESI, right? Now let's consider the different facts related to SARFAESI over there. First of all, you must be giving a 60 days demand notice, which is a very important notice under the 13(2). It is said to be 13(2) notice. It is said to be the 13(2) notice that is related to demand notice over there. It is what notice? It is a demand notice over there, and further you must be considering the same. So it's a demand notice. Okay, so you must be considering the first case, it's related to that you must be considering this. Okay, so if the borrower is having any kind of objection, so this is a 60 days notice which is given to the borrower, and further if the borrower is having any kind of objection, the borrower can raise the objection to the bank. We can say the objection can be raised to the bank, and for the bank is to give the reply over here. The bank is to give the reply within a period of 15 days. Within a period of 15 days, the bank is to give reply to that particular objection, right? And further, during this period, the borrower can also make application to the prescribed DRT if the borrower wishes to. In that scenario, after receiving the demand notice, within particular period over 45 days, the borrower is to submit a fees, and further can particularly take the case to the DRT, that is a debt recovery tribunal over there. And DRTs are to dispose of the cases within a period of 60 days of any application which is being filed before its borrower whose assets has taken possession by the particular lender over there. What does it indicate? It indicates if the possession of the property has been taken over by the lender, and further the borrower has filed the application with the DRT. In that scenario, the case is to be resolved within a period of 60 days. Within a period of 60 days, the case is to be resolved. And further, if the DRT is failed to take a decision even in the period of 4 months, if the decision was not taken, in that scenario, the person, that is a borrower, can make an appeal to the DRAT. Then they can making an appeal to the debt recovery appellate tribunal. So the process is the bank will be giving a demand notice of 13(2) to the borrower. That will be 60-day notice. If the borrower is having any kind of the issues, they can raise an objection. The bank is to reply in 15 days. And also at the same time, after receiving the demand notice, the bank can go to the DRT with prescribed fees within 45 days. And the DRT is having 60 days time period so as to resolve the case in those scenarios where the possession of the security has already been taken by the lenders over there. And further, even if the case is not resolved in the period of 4 months, in that scenario, the borrower can represent and further can make an appeal to the DRAT, that is debt recovery appellate tribunal over there, right? And further appeal against the DRT can be made within 30 days. It can be made within period of 30 days. Let's say case the judgment was passed by DRT. Let's say the case the judgment was passed by DRT. In that scenario, within 30 days, the appeal can be made to DRAT by the borrower over there. In that scenario, 50% of the fees, 50% of the outstanding amount fees is to be deposited so as to make an appeal to the DRAT, that is actually required over there. And appellate may reduce this fees amount to not less than 25% of the debt amount. So appellate, if found person rightful, in that scenario they can be decreasing this amount to 25%. Otherwise, particularly appeal cannot be made to DRAT over there, right? And after let's understand the sale of assets. Now 13(2) notice was given, which was 60 days demand notice that was given to the borrower. And now after that, after the particular period, 60 days period, the possession will be taken. There will be repossession of the security by the secured creditor over there. And further, there will be publication of the same. There is publication of the same related to, and this publication is to be done within a period of 7 days after taking the possession. Within 7 days after taking the possession, the publication in 2 newspapers, one regional language and one national newspaper, that is to be done, and that is to be done twice. First time within 7 days after taking the possession, and second time 30 days sale notice. When the sale is to be notified, 30 days sale notice is to be done, and this time publication is to be done after taking the possession after 7 days only, right? And further, the chief metropolitan magistrate or further the district magistrate shall pass suitable orders in an application for assistance of taking possession of the secured assets under the new section 14 within 30 days, right? Let's say case that the 60-day demand notice pass. In that case, the bank will be applying to the magistrate, to the chief metropolitan magistrate or the DM, that is a district magistrate over there, so that they can helping out for the security purposes, and for the they can helping out so as to take the possession of the secured assets over there. And this is governed under section 14, and this can be done within 30 days. This can be done within 30 days after the demand notice, okay? And further, this can be extended by another 30 days. So they'll be helping you out within 30 days, but if the suitable time is not there, in that case, this can be extended by another 30 days after recording the reasons for thereof, that what are the reasons that why they are not basically ready right now, so as to let you take the possession of the same, right? And further, bank will give after you have taken the possession, and let's say case valuation and all the things have been done. In that scenario, the bank will give 30 days sales notice, 30 days sales notice over there related to the assets, and this time also one notice in the regional newspaper and the other one in the national newspaper is to be done, and proper valuation of the asset is to be done prior to sale, and reserve price will be arrived. Now reserve price is actually that price that below which the sale cannot be concluded, below which the sale cannot be concluded. And further, if the offer price at the reserve price cannot be obtained, let's say case that the auction was there, let's say case auction was for rupees 30 lakh, but we were not able to basically get any of the bid for 30 lakh rupees. In that scenario, the asset can be disposed of at the lowest of the lower price also, but only after taking the consent from the borrower. So you have to take the consent from the borrower, only then you can be selling the particular asset at a lower price, lower than the reserved price over there, right? And once the sale is confirmed, kindly please note it down, once the sale is confirmed, 25% amount is to be deposited immediately. So particularly the sale will be confirmed on the receipt of 25% amount, and for the balance amount is to be paid in 15 days. 75% amount is to be paid in 15 days, right? So notice before possession is particularly for 60 days, that is 30 into notice, and reply to borrower objection within 15 days. Borrower can approach the DRT within 45 days, and appeal to DRT against DRAT against a decision of DRT, it is 30 days. Notice before sale, it is 30 days, and for the period for balance payment, it is 15 days, right? So you are to note down these particular days over there, and which time period the bank will be reverting to the same, okay? And after that, it's related to DRT, that is a debt recovery tribunal, related to the debt recovery tribunal. So it was the RBWM Act. Now RBWM is recovery due to banks, recovery particularly due to banks and financial institution acts, that is the RBWM Act 1993, and under this particular act, DRT and DRATs were established. The main purpose was related to, there was huge number of NPAs over there, and further so as to foster the trust of the public in the business and the banking structure over there, we wanted the NPA levels to be lower. That's why DRTs and DRATs were set up, right? So first of all, we are going to discuss about the DRT. Now in the DRT, the head person is PRO, that is a presiding officer, right? So presiding officer is the sole judicial authority so as to hear and pass any judicial order. Okay, in that scenario, if the PRO is a sole judicial authority, so as to hear and pass any of the judicial order, and every debt recovery tribunal is presided over by a PRO, that is a presiding officer, and presiding officer shall be a person who is actually qualified to be a district judge, or is assisted by or many or recovery officer or any such other officer over there. And further, the presiding officer of a tribunal shall be holding a office for a term of 4 years. So they will be holding office for a term of 4 years or up to the date, particularly as per the appointment over there, right? So they will be holding office for 4 years. And if we look for the enforcement, so DRT have the jurisdiction over the cases where the minimum amount due is 20 lakh rupees. So only those cases, only those loans where the minimum amount due is 20 lakh rupees, those can be applied for the DRT. Those can be applied for DRT. And application fees for the amount of debt due is rupees 20 lakh. Let's say case if application fees for the amount due for rupees 20 lakh, let's say case overdue amount is 20 lakh. In that case, the application fees amount will be rupees 12,000. application fees amount will be rupees 12,000. But let's say case if the application amount is particularly, let's say overdue amount is 25 lakh, in that case application amount would be 12,000. And further for every 1 lakh above 20 lakh, rupees 1,000, that is for this case it will be 17,000. And this can be maximum up to rupees 1,50,000. This can be maximum up to rupees 1,50,000. Now let's understand the process related to the DRT. Okay, so first of all, the application, if we talk about the application is made to the tribunal having the territorial jurisdiction. So let's say case the bank in this particular jurisdiction, and particularly in this jurisdiction this DRT falls, so the application will be made to this particular jurisdiction, and it can be made in that particular DRT where the defendants are residing. Defendant means, let's say, where the borrowers are residing or the course of action has taken place. So we can be making the application to those particular DRTs where the particular borrowers or guarantors are residing, or particularly where the branch is located. Okay, and the application may be presented by any person or by agent or by legal practitioner, or sent by registration post to the registrar of the DRT. So the application will be sent to whom? Application will be sent to registrar. It will be sent to a registrar, and further to that particular DRT which is in the territorial jurisdiction of the bank or where the defendants are residing, right? And for the application must be in the prescribed format. It must be in the prescribed format and shall be presented to the registrar, and further it must be sent in 4 copies. So 4 copies are to be sent, and that must be in a book form, that it must be having an index, it must be having a plane, it must be having the documents associated, it must be having the affidavit, and further wheresoever the translations are required, those must also be accompanied, right? And further it's related, let's say case you made an application to the registrar, you basically sent an application to the registrar through the legal practitioner or particularly through the post over there, and you sent it to the registrar, and registrar particularly denied your application. He never basically accepted your application. In that scenario, you can make an appeal to the PRO, to the presiding officer, and decision of PRO will be full and final. And the decision of PRO will be full and final, and this appeal can be made within 15 days. Can be made within 15 days of rejection from the registrar over there, right? And further the decision of particular PRO will be final over there, right? And after that it's related to proceeding language. Now the proceedings of the DRT are conducted either in Hindi or English, and application in any other language has to be accompanied by the translation. So there must be translation. If there is any document, let's say the document is in Punjabi, that must be translated to either Hindi or English over there. Further, it's related to joining the proceedings by the other financial institutions and banks over there. Let's say the case that XYZ Bank initiated the DRT case against A, right? And further, PQR Bank is also aware that there are some dues of PQR Bank also. Now the PQR Bank can also be joining this particular case itself, right? So if the person whom against the debt has been filed, okay, so other banks or financial institutions are also having the claim against the same person. So rather than filing the debt case again, they can be joining the same case, right? They can be joining the same case. So they may be joining the applicant bank during any stage of the proceedings. So during the any stage of the proceedings, they can be joining this particular case over there. For this particular case, they must be making a presentation to the registrar, and further they can be joining the case over there, but it must be before the judgment or the final order has been passed by the registrar, by the presiding officer over there, right? Further, it's related to issue of the summons, right? So basically what happened, that bank is there and you basically gave the application to the registrar and it was approved. Now after that, the DRT will be issuing the summons. Let's say the application is accepted. So within 30 days of acceptance of the application, summons will be sent. Will be sent to the defendants over there, so as to showcase notice, so as to basically show cause within 30 days. So within 30 days the summons were given, and these particular summons are giving them 30 days so as to show cause. Related to what? That whatsoever have been prayed by, whatsoever the relief which has been prayed by the bank over there, by the lender over there, why it should not be granted. So that's a particular notice that is given to the defendants over there, and after that the defendants, in this particular period, the defendants are to show cause, right? And further after that it's related to disposal period. Now DRT is expected to dispose of the application within 2 hearings or maximum within 180 days over there, right? Now in between an interim order can be given. So DRT can be given an interim order related to that the defendants cannot be disposing of any of the property, any of the assets without the prior permission of the DRT. It is an interim order which can be passed over there. Further, it's related to application for recovery certificate. Now let's say the case after the decree is passed. Let's say case there were hearings and for the DRT passed its judgment that a particular possession can be taken or something like that. The particular has been passed, the decree has been passed. In that scenario, the lender or the financial institution will be applying for issuance of recovery certificate. Okay, and recovery certificate will be applied for. So they will be applying for recovery certificate and will be applied for from the recovery officer. The recovery officer will be giving the recovery certificate over there. They will be giving the recovery certificate over there, and thereafter when the recovery certificate has been given, the following steps have been taken. The following steps have been taken by the recovery officer. So recovery officer, after receipt of recovery certificate, we follow the following procedures. What are those processes? That whatsoever the assets which are available, the recovery officer will be attaching those assets and will be selling all the movable and immovable property of the defendants, and further they can also be arresting the defendants over there, and also can be detaining them in the prison over there, and also so as to appoint a receiver for the management of the movable and the immovable properties of the defendant over there. So they are having the unlimited powers related to attachment of sale, related to the arrest of the defendants, related to appointment of the official receiver for the management of movable and the immovable properties over there, right? And further, it may also be the case that the defendants may be aggrieved. It may also be the case that the defendants may be aggrieved by the order of the recovery officer. Under this case, they are having the 30 days from the date within which they have received the copy of the order. So defendants received the copy of the orders. So within 30 days over here, they can be prefer an appeal to the tribunal. They can make an appeal to the tribunal over there, and on receipt of the appeal from the tribunal, after giving opportunity to the appellant to be heard, after making such inquiry, if deemed so the presiding officer over here, either they can be cancelling the order, they can be modifying the order, or particularly they can set aside the order, right? So they can either be confirming the order, or particularly modify the order, or set aside the order. So appeal can be made by the defendants within 30 days after receiving the order from the particular recovery officer. Appeal can be made to the DRT again, and further the steps can be taken, right? And any recovery which has been made by the recovery officer will be treated as recovery of areas of the revenues, right? And further, presiding officer shall keep RO informed of any amount paid, okay, or time granted for payment subsequent to the issue of such certificate. Let's say the case that recovery certificate has been issued by the recovery officer, and particular after that subsequent amount was given by the presiding officer to that particular defendant, that in this particular period you can be depositing the money. So that must be notified to the recovery officer over there, right? Further, it's related to disobedience of the order of the DRT. It may be the case that the orders are not being followed. Whatsoever the orders are being given by the DRTs are not being followed. In that scenario, such person can be detained in the civil prison not exceeding for 3 months. Okay, not proceeding with 3 months, right? And for the appeal against the DRT. Now, let's the case the defendants are agreed by the orders of the DRT, they can be filing an appeal for DRAT, that is Debt Recovery Appellate Tribunal over there, and chairperson is the head of the DRAT. In DRT, the head is PRO, that is presiding officer. In DRAT, the head is chairperson over there. And further, the appeal can be made within a period of 30 days. When the order has been passed by DRT, within 30 days an appeal can be made to DRAT, and even after the expiration of such appealing period, over there, if it basically satisfied that there was sufficient cause of not filing the particular appeal within this particular period, the chairperson can allow so as to file the appeal in DRAT even after expiration of such period. And for filing such appeal with DRAT, the defendants have to deposit 50% of the outstanding amount, right? So whatsoever the decreed amount was there for which the case was filed in DRT, 50% of amount is to be particularly deposited. Only then the appeal can be made. But the chairperson of the DRAT, if the reasons are recorded, they can be waiving off or they can be reducing the amount of such deposit to 25%, right? So DRAT shall deal with the appeal filed at the earliest, and further there is endeavor so as to resolve the appeal within 6 months over there, right? So that's the case related to it, and the tribunal and the appellate tribunal shall have the same powers. Tribunal and appellate tribunal have the same powers as vested in civil code under the CPC over there. Okay, so that's about the DRT. So one we are having the DRT where the head is PRO, and for the other one we are having the DRAT where the head is chairperson over there. Okay, and after that it's related to the Lok Adalats. Now Lok Adalats, that is people's court set up under the Legal Services Authority Act. So these are set up under the Legal Services Authority Act. So the cases up to rupees 20 lakh, cases up to rupees 20 lakhs, those can be dealt under the Lok Adalats, and even the special Lok Adalats which are set up under the DRTs, the cases up to 1 crore rupees can be dealt with, right? So this is one of the component of the alternate dispute resolution, that is actually related to ADR system, alternate dispute resolution system, where the informal, cheap and expeditious justice can be delivered to the common people, right? So the state or district legal services authority or the Supreme Court, High Court, Taluk Legal Services Committee may actually organizing the Lok Adalats at the interval. So they can be particularly doing what? They can be organizing the Lok Adalats over there, and as I told you, the cases up to rupees 20 lakhs can be referred to the Lok Adalats over there, and further in the special DRTs, special Lok Adalats which are set up under the DRTs over there, cases above than rupees 20 lakh up to rupees 1 crore can be dealt in the DRT over there, right? So the advantage of the DRT is what? The main advantage of the DRT is that there is consented decree, the consent between the defendant and the lender over there, and particularly based on that consent the judgment will be given, and further there is no court fee involved, as we saw that in case of DRT hefty court fees there is no appeal against the order of the particular Lok Adalat over there, and also there is expeditious disposal of the case over there, and further accounts which have been settled by the Lok Adalat should be adjusted within a period of 1 to 3 years. This is the case. So those are to be adjusted within a period of 1 to 3 years, and permanent Lok Adalats are also empowered that they can also be entertained the matters related to the civil and criminal nature. So not only related to the financial matters, but so whatsoever the matters which are actually related to civil and criminal nature, which are permanent Lok Adalats, they can also be dealing with the same, with civil matter falling within a limit of rupees 1 crore, and criminal dispute is compoundable in nature over there, and those matters can also be concluded in Lok Adalats over there, right? And further, if there is default in complying with the orders of Lok Adalat, if there is default in complying with the orders of the Lok Adalat, in that scenario orders can be executed through ordinary civil code. Orders can be executed through the ordinary civil code over there, right? So that's the case. After that we are going to discuss about the engaging DRAs. Engaging DRAs, that is a direct recovery agent. Engaging the direct recovery agents. Now generally in case of the public sector banks, the recovery process is actually in-house, where the employees themselves go for the recovery purposes. Now in that scenario, what's one of the case, but in the case of private sector banks and the foreign banks over there, for recovery purposes they outsource this particular case. They do outsource this business, and for the DRAs are particularly appointed for the same. The DRAs are appointed for the same, right? So practice of the banks and financial institution of hiring external agencies and the individuals so as to assist in the process of loan recovery from delinquent borrowers over there, right? So that's actually related to DRAs over there. Now what are the RBI guidelines? So banks must establish a due diligence process for engaging the recovery agents. So whensoever you are hiring the recovery agents, there must be a due diligence process that must be looked into, and further the borrowers must be informed. So banks must be informing the borrowers about the recovery agency firms, about the recovery agency company when forwarding the default cases to the particular recovery agency. Let's say case XYZ bank is there, and they particularly appointed DRA, that is the Debt Recovery Agency over there, and particular borrower is A. Now in that scenario, A must be informed that DRA has been forwarded their case related to recovery over there. So borrower must be given a due notice and appropriate authorization for the engagement purposes over there, that this particular agency will now be engaging with you for recovery purposes, right? So due notice must be given, and further providing the contact information. So notice and authorization should be include relevant details related to phone numbers of the recovery agency, and bank should ensure tape recordings of the communication between the recovery agents and customers. So if there is any communication, telephonic communication, it must be recorded, whatsoever the communication between the recovery agents and the customers over there, right? Further, it's related to handling the grievances and complaints. So banks should not forward cases to recovery agencies if a grievance or complaint has been lodged by the concerned borrower. Let's say borrower has concerned a complaint with you that they are facing a particular problem with the agency over there, then particular details, particular case must not be followed to the recovery agencies over there. Further, it's related to mechanism of addressing the grievances. So borrowers should be informed about this mechanism, that there is a mechanism. If they are facing any issue from the recovery agency, they can be applying for this grievance over there. And also there is a training and examination related to the same. So recovery agents which will be hired by the direct recovery agency over there, they must be going through a proper training for 50 hours for the graduates and 100 hours for the non-graduates, right? And for the agents, it is also required so as to pass a exam, that is DRA, that is a debt recovery agent examination is to be passed, which will be conducted by the IIBF, right? And minimum passing marks for the DRA is 50%, right? And for the related to incentives to the recovery agents. So banks are to ensure that the contracts with the recovery agents do not induce adoption of uncivilized, unlawful, questionable behavior. That it's not the case that if you recover 1 lakh rupees, will be giving 10,000 rupees. This is not the case, right? Otherwise, they will be following what? They will be adopting the uncivilized, unlawful, and questionable behavior over there. So those things must be avoided. Further, it's related to complaints against the banks or its recovery agents, right? So let's say case banks are principals over there, because bank is an agency, bank is the principal because they have hired the agency, so they are principal, and agency over here is the agent, agency over here is the agent over there. So principal, that is bank over here, will be responsible for the doings of the agents, So that's why the banks must be ensuring that whomsoever the agents are insured or particularly engaged in the recovery of their dues must be strictly adhering to the guidelines which are prescribed by the BCSBA. So whatsoever the BCSBA code has been given recovery to the procedure of the recovery over there, that must be followed by the agents over there. And for the whichever the complaints received by the Reserve Bank of India regarding the violation of the above guidelines or adoption of the abusive practices related to the by the recovery agents over there would be viewed seriously. So if there is any complaint which is received by the Reserve Bank of India related to the same, that will be viewed seriously in that concern. Okay, and also the Reserve Bank of India may consider imposing a ban on the bank. So if a bank is not following the guidelines, in that scenario, the Reserve Bank of India can also impose a ban of that particular bank so as to engage any of the particular agency for a particular area, for a particular jurisdiction, or for some particular limited period over there, right? So that will be all related to the recovery in case of the retail loans. So we basically learned about we have learned about the DRA, we have learned about the SARFAESI, we have learned about the DRTs, Lok Adalats, and much more. I hope that you must have enjoyed the session. So do rate the session out of 10 over here, and do not forget to visit our website jaiib.learningsessions.in, where you can be getting all the PDFs for free of cost. Just sign up over there and further access the PDFs for free of cost. So that will be all. Thank you so much, and see you again on the other side in the next video.